Was I wrong about 40-year mortgages? Well, you're going to have to watch to the end of the video to find out. Because I'm Professor Capko, and I'm here to help you analyze the differences between a 30-year mortgage and a 40-year mortgage. But first, I want to mention that I believe that something great is going to happen for you today. And now back to the video. As you may have seen, I did a prior video when the government came out and said they were going to be okaying 40-year mortgages. I did a video analyzing some of the differences in the amount of interest and payments you'd be making comparing the 30-year and the 40-year mortgage. If you missed that video, I've linked it up here. I recommend you watch that one first and then come to this one for the follow-up to see how we can dig a little bit deeper and figure out maybe what is best for you. All right, in that video, one of the points I made when I analyzed it was that a lot more interest would be paid over the 40-year mortgage than the 30-year mortgage, even though the 40-year had a lower monthly payment. So I pointed that out, and many of you came back with some very good points. And I'm going to get into those in a moment. But I do want to mention, if you think that mortgage rates are too high and housing prices are too high and that homes are just not affordable for the average person, give this video a thumbs up. Maybe we'll get the word out there that they need to make homes more affordable for your average person. All right, let's look at this. I'm going to use the same numbers that I used for that prior video so we can compare it. Let's say you have a home that you purchase for $490,000. You make a $90,000 down payment, and the amount of your mortgage, the amount that is loaned, is $400,000. I use a fixed interest rate of 7%, which is more or less what the average rate is at the time of this video. And when I calculated the payment at the 30-year point, each payment was $2,661.21. I then calculated the payment for the 40-year loan. I left everything the same, including the interest rate, to arrive at a payment over 40 years of $2,485.73. Now, in reality, oftentimes your interest rate for the longer loan, the 40-year loan, will be higher than the interest rate on the 30-year loan, and that's mainly a factor of the additional risk that the lender takes on having to wait another 10 years to get their money back, and the opportunity cost of having that money tied up and that the lender can't use it to finance some other investment. So, however, just to keep apples and apples, to compare it fairly, I'm going to use the 7% interest for both. Also, I want to mention that these payments are for principal and interest only. Your actual housing payments may be quite higher, and that is because housing payments include not only principal and interest, but they might include taxes, escrows, other fees, homeowners association payments, homeowners insurance, PMI. There's a whole lot of things that could be tacked onto that payment. So these numbers are only for working with the amount of interest and principal that we are generating for this loan. Keep that in mind, and that's for both of these. In my prior video, I pointed out that you would be paying, if you got the 40-year loan and kept it until the very end, you'd be paying an extra $150,879.60 in pure interest. It's making the lender wealthy. That's the extra interest you'd be paying on the 40-year loan. And I was saying that I don't want to see you pay that much interest. Now, you can see, however, your monthly payments are going to be lower, and your monthly payments are actually lower using the 40-year mortgage by an amount of $175.49. So, a little less than $200 a month you're saving there. Many of you pointed out, and it's an excellent point, that most people do not stay in their home 40 years. They don't even stay it in 30 years. The average time period might be between 5 and 10 years, and then they sell it and move on to somewhere else. If that's the case, well, maybe the 40-year mortgage is for you because you save $175.49 per month, and you're saving that every month, and you won't pay this full amount of extra interest because you'll be selling the house sooner than that. So that's a factor that you need to consider for yourself and how that works for your family. I'm of course not giving any kind of accounting, financial, legal, or real estate advice. I am only showing you how the numbers work so you can make the best decision possible for you and your family. So there's a savings every month of this amount. Another thing that was pointed out would be that you could get the 40-year mortgage, take advantage of the lower payment that is required, but pay the mortgage like a 30-year mortgage. In other words, pay the higher amount to the bank each month instead of the lower amount. And why would you do that? Well, because you would then tell the bank, and make sure you tell them this, that the extra money that you're paying each month should go toward principal. You want that to pay down the principal. And if you did that, if you made these payments every month, you would actually pay off your 40-year loan in 30 years. Now, what's the point of that? Why not just do a 30-year loan? Well, the point of it is it gives you some flexibility. You've got this lower required payment, and if something happened, if some emergency arose, your income was reduced, there was a sickness, something happened that you couldn't make this full payment, you could then back off and just make the lower payment, hopefully, and save this money every month to use toward whatever the emergency is. So that's a valid point, and that is a completely valid strategy. Keeping in mind the 40-year loan might have a higher interest rate, so that may wipe out that extra benefit. But keep that in mind, and that's something that you may want to factor in. So that's a completely valid strategy. It gives you a lot of flexibility, and that would be paying the 40-year loan like a 30-year loan. Also, you could get the 40-year loan, and instead of paying the extra $175.49 to the bank every month, you could be putting it aside into an investment, a savings account, a money market, some other investment, and growing over time, and you could use that for some other investment, or you could use it to pay down the principal at some point when you're ready to do so. But that way you would remain liquid, and liquid means you would have the cash. So that's yet another strategy you can use. One other thing that's pointed out, that let's say you rented this property out. Now, mind you, 40-year loans may not be available on rental property. They may not be available to you at all, but unfortunately, I think it may be the future, because as housing prices keep going up and as interest rates keep going up, I think lenders are going to have to keep extending the length of the loan to keep the payments somewhat affordable, if you consider $2,485.73 affordable. But I digress. If you were to have this house, and let's say you were going to later rent it out to a renter, you would want the lower payment to make to the mortgage company, because the difference between what the renter pays you and what you're paying the mortgage company would be a positive cash flow to you. Hopefully you're renting it out for more than your mortgage payment. That difference would be money in your pocket. If you have to pay the higher amount, that is making it more difficult to have a positive cash flow. So keep that in mind if you intend down the road to rent out your property, if it's a possibility. So, was I wrong in my first video? Well, absolutely not, because I don't make a decision for you. All I do is do the numbers. I show you how the numbers work out, and you're going to make the decision yourself what is best for your family. I wanted to bring up these extra points. I think they're excellent, and I want you to tell me what else I missed. If I missed something else, if you have another great point of view, please put it in the comments below. I'd be happy to respond to you, and if need be, I'll make another video. But in the meantime, If you want to learn more about finance, real estate, accounting, business law, just things like that, please subscribe to my channel so you won't miss out on this, and click that notification bell so you won't miss a single video. Thank you.